Welcome back. Now, this is going to be a cheerful conversation. A lot of economists have been extremely bullish about the Indian economy starting from next year to the entire next decade. A while back, Morgan Stanley wrote a blue paper saying Indian economy will more than double by 2031 to $7.5 trillion economy, which means almost an annual growth of 7%. We now have a paper from HSBC India's chief economist, Pranjul Bhandari, saying her base case is 6.5% GDP growth every year for the next 10 years. But if India can bring digitization benefits to its old economy, that is to agriculture, to MSMEs, then a 7.5% growth per year is possible, taking India to an 8 trillion economy by 2032. I have with me Pranjul Bhandari herself, the chief India economist at HSBC. Pranjul, thank you very much indeed for joining me, and a very, very cheerful report. But first up, are you changing the current year's growth forecast? If I remember right, you're below 6 at this for this year.
I think you're at 5.5% growth. You really need to differentiate between cyclical growth and structural. This year, there are a lot of cyclical headwinds. Global growth is slowing. We've had our own monetary and fiscal tightening. All of that, in our sense, will lower growth over the next 2 quarters.
Okay. Also, just an important bit of news coming. The law minister has been replaced. It's no longer Kiren Rijiju. It's Arjun Ram Meghwal. Meghwal has earlier been, even in the finance ministry, a person who comes with much experience. Okay, no, Pranjul, that's the point. The point is when people like you and Chetan speak about 6.5 or 7% for the next 10 years, aren't you being a little bit optimistic about, say, what will be the global headwinds be? It doesn't look like many of the global big economies are so much in growth mode. There are aging populations. And separately, there is the big climate worry. Every other year, we get a shocker. So are you all being a tad optimistic?
Well, yes, you can say that. But on the other hand, we have a lot more things to drive growth today, which we did not have, say, 5 years ago. What really excites me is what I call New India, which is made up of high-tech sectors. Something like our startups on the back of our digital public infrastructure. We did not have this infrastructure about 5 to 10 years ago. And then there is this big rise in our exports of high-tech goods and services. India has been gaining market share in the exports of items such as mobile handsets, drugs and pharma, automobiles since 2017, and the services export story is even more exciting. You yourself have written about it. It's not just your IT majors, but it's also your IT minors and a lot of consulting firms, and also the GCCs, the Global Capability Centers, where the MNCs put up their captive services center in the country. So all of this is coming together in a very interesting manner. And this has all been very recent, almost through the pandemic. And I think this is what will drive growth. Now, this part, New India, makes up about 15% of GDP. And our sense is it could grow about 11% per year over the next decade.
Okay. Your expectation is that if we apply the same digitization trends or mechanisms to, say, agriculture and to MSMEs, then a 7.5 is possible. Otherwise, our potential growth is 6.5. Is that right?
That's right. So if New India is the only part of India which grows, which is basically the high-tech sectors, then you get a growth of 6.5%, which is good in its own right, because before the pandemic, growth was about 6%. So it's higher than pre-pandemic. It will double the size of India's economy in the next 10 years. It's good in its own right. But the problem with 6.5% growth is that it doesn't create the jobs India needs. Remember, India has become the most populous country in the world as per the UN this year. It needs to create 70 million new jobs, at least in the next decade. 6.5% growth only gets us about 1/3 of the jobs. And that's when I ask, can India grow even faster so it can create even more jobs? And that's when, it sort of stares out at you that it's not just New India that needs to rise. We have to have Old India rise as well if we want to create the jobs. And the parts of Old India that sort of need some energy is agriculture, hopefully via agri-tech, And then there is the low and medium tech manufacturing. And I think that's where a new India can move in and try to energize old India.
Well, actually, this is throwing up several questions. First, a minor question. Why is everyone talking about this 70 million jobs for a whole decade? That's only 7 crore. I mean, if you looked at the participation in labour force, we have fallen from 50% to 38%. That itself is some 12 crore jobs. And plus, we are going to, as you said, become even more populous as a country. From perhaps 140 crore, we go towards 145 in the decade. So why would 7 crore jobs be sufficient?
So the number is about 7 million jobs a year, so 70 million jobs in a decade. It is lower than some estimates people have of about 9 to 10 million jobs per year, which is about 80 to 100 million jobs in a decade. And the big reason is, as you said, labor force participation. We've had it fall. I'm not just talking about female, I'm talking about male and female together. We've had it fall over the last decade to about 50%. But in the latest reading from PLFS, it has also risen back up to 55%. And I'm assuming 55% to be the labor force participation rate in the next 10 years. If you assume it to rise back to about 60% level, then we'll have to create more than 70 million jobs. But I'm going with the latest trends that we have at this point.
Okay, fair point. That was anyway a minor issue. The bigger point is, are we betting too early, too much on digitization? Because this services exports that you spoke about and that I waxed eloquent several times, much of this could be in danger because of artificial intelligence and ChatGPT. So can we be very sure that this 15% new economy that you're talking about does grow to 25% unimpeded? Or is this also vulnerable to technological changes?
Of course, there are all kinds of technological challenges that are there right now. But my sense is, globally, we've always thought of climbing up the value chain of manufacturing. India is actually climbing up the value chain of services. In the pandemic, many companies realized that, front-end work can be done back-end. But why not from a different country? And that's when a lot of the MNCs started putting not just IT services, but also their research and development, business support, design work, all of that in India. So in a way, India's services sector has gone up the value chain. And I think the benefits of that will linger. About AI, yes, it is going to create some amount of challenge. There will be a kind of productivity growth on the back of which profitability, will come off for some of the companies providing IT services. But at the same time, it also opens up new avenues, at least in the short run. For example, using generative AI more for the BFSI sector and so on and so forth. So in a way, our IT services sector will just have to be very adaptive and very nimble. When new opportunities are arising, it will have to quickly move there so as to overcome, the opportunities that are going to get lost. Thankfully, this is a sector we've seen as being rather nimble over the last decade or two. So, fingers crossed, there are a lot of hurdles to be crossed. But I'm hoping that in the next couple of years, we still continue to climb up the value chain as we have been.
No, I take your point entirely. If you have to bet positively, optimistically on any sector, it's IT. They discovered an opportunity in the early 90s and have gone on to build it, not missed an opportunity or trick since then. But the bigger question is what the political economy has missed. You are speaking in your chapter 3 with some detail on how we need to upskill. If you have to modernize, digitize the old economy, there is a great deal to be done in terms of education and upskilling. And that's not how the political economy is going. We have moved away from providing more municipal schools and, health infrastructure. We move towards providing goods, like we provide a gas cylinder or you provide a 2,000 rupee basic income. The whole shift of poll promises has changed completely from providing services to providing public goods. So do you think we could be missing this trick altogether?
Well, look, as I've sort of made it very clear, there are many hurdles and many hoops to cross. We have done some important reforms over the last 5 years. We all know about GST coming, maturing. We know about the digital public infrastructure, trying the RERA, the IBC. So we are doing a lot of things, but at no point can we become complacent that this is enough. Lots of reforms are needed. For instance, as you said, in the pandemic, our education and skilling standards have taken a setback. We really need corrective measures. There are a lot of people, good people, working on this area at this point.
Yes.
It's not going to be easy, but it has to be done right for us to sort of, go up the value chain and have all these aspirations come to reality. Then there is capex. We keep talking about private capex, but we haven't really seen the cycle. The hope is that when the macro environment globally stabilizes, investment rates will begin to rise again, but it must happen. Then there are reforms. We've done a lot of reforms, but many more remain on the direct taxes, getting a proper tariff structure, a climate change framework, as you had pointed out in the start of the conversation, judiciary reforms. So all of that has to happen. So as you said, many things have to come together. And if they do, I think India can go in the 6.5% to 7.5% clip. But the risk always is that some of these important things are not done.
Okay, absolutely. A colleague of mine was pointing out that Maersk, the shipping logistics company, is complaining that 99% of its litigation is in India, although it has only 2% of the business in India. So yes, legal reforms, lower judiciary. But Pranjul, a more immediate question to you. Are you penciling in a rate cut? I mean, we've seen the 10-year bond yield fall by 0.5% from its 7.45 in March to 6.95 now. As well, inflation numbers both in India and in the US are coming lower than expected. Any rate cuts penciled in?
Yes, the world for India has really changed in the last couple of weeks, as in inflation has really come off, food prices continue to fall. Inflation in the next month, as in the previous month was 4.7%, next month could be closer to about 4.3%, given the food trends we are seeing right now. So look, it's all coming together. But my sense is that the RBI in its June meeting will perhaps consider a change in stance. I think it's too early to talk about a rate cut. Remember, the 4% inflation target is nowhere in sight. I do expect rate cuts, but not this calendar year. I'm expecting it in early 2024. And my sense is that about 25 to 50 bips is what we can afford at this point.
Okay, but you're not changing. You're at 5.5 this year. Are you at least at 6.5 GDP for next year?
Yeah, we are in the just north of 6% for next year, and then we sort of go on to the 6.5% growth, which is our base case for the next decade.
Okay, well, I might tell you that the Reserve Bank is already at 6.5 for this year. Let's see who gets it right. Thank you very much, Pranjul Bhandari, for joining in and for explaining what's a very, very bullish, optimistic report, which I think everyone must read. We wrap up on Bazaar. On that note, Chartbusters up next.